Hey folks, we're back and it's that time of the year, tax season, and that's when we have our tax specialist, Beth Bennett. It's now time for Tax Tips with Beth Bennett from H&R Block. How are you, Beth?
I'm great, Brian. How are you today?
I'm doing very well. Okay, so let's get anything out of the way that we want to say that surrounds rain. If you want to say something that surrounds rain, get it out of the way now.
I'm trying to decide if I need a bass boat, a pontoon boat, or a speedboat.
Okay. We got to give everybody that opportunity on social media.
Trade in the car, you know.
On social media, what about the one picture of somebody in a boat rowing past the windows of a house?
I like it.
You know. So, oh yes, we have a little rain up here in North Georgia, all of the North Georgia, Western Carolina area. But we're talking taxes, and it is now we are in tax season. But we'll get to this in a minute. Tax season is all year round, but this is filing season.
This is filing season.
All right, we'll go with that. What do we want to talk about today and share with our viewers?
So I thought we'd talk about itemized deductions. I think it's a big misconception this year that you can't itemize, when in fact you can still itemize. We just want to make sure that it's most beneficial for you to itemize. So I thought we'd talk about some changes that came with that and why you could or shouldn't itemize.
What are some of the deductions, itemized deductions, that you could take in the past that you can't, or you still can, or the number one misconceptions out there of deductions right now?
So one of the big things right now is that, you know, your standard deduction practically doubled. So like last year, a married couple standard deduction was $12,600. This year that went to $24,000. So now to itemize, probably in most cases you want to beat that. So you want to have more than $24,000 or very close to $24,000 to itemize, and that be more beneficial for you on your tax return. So that's a misconception. Well, I can't itemize, but you still can. It's like, for instance, I know one tax return, the person had only $21,000 on their tax return in itemized deductions, but it still came out better for them to itemize versus taking the standard deduction because the benefits that it carried to their state return. So you got to look at everything on the tax return. You can't just look in one little spot. You can't just look 21,000 to 24. Well, that doesn't help. You got to look at the whole big picture. So keep that in mind. Look at the whole tax return. Sometimes you might lose a little bit here on your federal, but you gain enough on your state. So that's a really big deal because the state has a $3,000 personal, or not a personal, a standard deduction. So if you itemize on your federal and you get $21,000, that carries to the state. So $21,000 to $3,000, that's a huge difference, right? So you want to make sure you're looking at that. So that's one thing for the state of Georgia to look at. That's huge. Okay. Then the next is there's been several changes in itemizing this year. One big thing is moving expenses. If you moved because of a job, you can no longer take that expense. Only the military can take that. So that's a big deal now. Medical expenses, that went down to 7.5%. It's really hard to take medical expenses. Most people that get to take that have some type of very major illness. They see doctors a lot, take a lot of medications, and those expenses come above and beyond what their insurance pays for. It's really hard to meet that. Usually it's got to be something catastrophic happened in your life. So medical is not something a lot of people get to take anyway, but if you have something happen, you want to keep up with that. Like, let's just say you were in a major car wreck. And after that car wreck, you go to physical therapy for a year. And you have miles. Because, you know, we live in Ellijay, and sometimes we have to drive, I don't know, Canton, Marietta to go to our doctor's offices to reach those specialists. Those mileage, that mileage back and forth to therapy and doctor's offices, that's tax deductible.
So if you have, and I don't know how many people are aware of that. So because, you know, we're in North Georgia and we have some great medical care here, but we don't have all of the facilities that we need in North Georgia. So when you have something, whether it's rehabilitation or continuing surgeries, and it's something with, you know, a neurologist or something like that, you may be traveling to Atlanta 3 times a month.
Correct.
And you need to be aware when you go to these appointments based on health care, that is deductible.
Mm-hmm.
Interesting. Okay, because I think a lot of people, I for one did not realize if I just have a doctor's appointment for some reason, but if I have continuing care on something.
Right, if you're just going, a couple times a year, it's
Right.
not going to benefit
But
you.
if
You're
it's
not going to have
something
enough.
where I have to go, 3 times a month to Atlanta, or I've got to go to Gainesville or whatever twice a month for follow-up because I've gone through an accident or gone through, whether it be something medical that related, that could add up, and that's deductible.
Right. Anything that comes out of pocket after taxes. So like, on my husband's pay, his insurance is through his company.
Right.
And they take that payment for his insurance out before taxes. So that doesn't count for us. That's not tax deductible because they didn't take it out after taxes.
Okay,
Right? So that's not
right.
tax deductible. It's pre-taxed. So like when I pay my copay to go to the doctor, that's tax deductible, but I only go to the doctor a couple times a year. Fortunately, I don't have anything ongoing that I go to the doctor regular, and it's $30. So it doesn't add up enough. It's got to exceed 7.5% of your income before you get to take it. See why I said it's really hard to meet that. So medical's a pretty hard one to meet.
Let me ask you one other question before we close this morning. Excuse my cough. One other question before we close. Now, I haven't seen any articles basically this week, but for the past month, there's been several articles that some refunds are smaller this year. Some people are receiving smaller refunds, and they don't know why. What is the reasoning, or are you seeing smaller refunds this year?
We are seeing smaller refunds for people, and the biggest part of that is because, and we talked about it last year, I talked about it a whole bunch last year, and I've talked about it again this year. Last year, when Donald Trump put the TCIJ, Tax Cuts and
Yes.
Drawbacks, what he did was he reduced the tax tables on your paycheck.
Right.
Okay? So people had less withholding in their paychecks. Unfortunately, in today's world, almost everybody has direct deposit. And the withholding change was so minimal. So for example, if you're paid bi-weekly and made $40,000 and married claiming zero, you might have seen a $20 difference. So if your check just goes in the bank, and most people today don't balance their bank accounts, they just look and make sure money went in, but they're not always checking to see how much, or your pay isn't this exact same every week. You might not have noticed an extra $20. Or weekly it might have been $7 or $10. So people didn't notice that, but when you add $10 up per week, 52 weeks, it's $520, right?
Mm-hmm. That's
$520 at the end of the year. That's a big difference on a refund.
Right. So if you did not pay in, and let's just say, your biweekly was $30, and you didn't pay $30 biweekly, that's $60 a month. All right, average six times 12, and once you do that, you're 720. Is that 720? 6 times 12, 72.
Yeah.
Maybe, I don't know. I'm just that wasn't my strong.
I calculated a lot of people would see an $800 difference this year.
Okay, so
that was just my guess.
I said 720, but okay, if you say 800.
Yeah.
And you know what amazes me still, and not to get into that discussion, but why we continue to loan our money to the government up front and then find excitement in them giving our money back.
Well,
I'm sorry. I
personally don't.
I understand.
I try to break even. I'm even happy with Owen because I'd rather hold my money all year.
Exactly.
But a lot of people, Brian, use that as their savings account because they can't control their spending habits, and that's their vacation money, or I want new carpet this year, or I need a down payment for a new car. And so they come in with us and they plan, I need a refund of $2,000. And we help them plan that for their paychecks. So that was one of the things I talked a whole lot about last year. All the tax talks I did, anywhere that I spoke, I said, guys, go see someone, plan for this. It's big changes. You need to plan. Change your W-4s. Make sure your withholding is where it needs to be. My daughter's husband did not. She was ready to just, bend him into and
We're recording this.
I know. He knows. We've talked about it.
Oh, we've thought.
Yeah. He knows. Mike knows. She's a mean thing.
All right, already. Whoa. All right. But
so,
no, what I'm saying is I don't understand why somebody would want to loan your money to the government, and then you get excited that they give your money back. But
with
that's
no interest.
With no interest whatsoever, but that exactly. But that is.
But we're all in different spots in our financial world, and so we just roll with that. And we try to help everybody the best.
But the reality is, if you didn't pay in $800 last year, you actually had $800 of expendable income.
Correct.
And the government's not going to give it back to you because you didn't pay it in.
Right. It just was in such small amounts in your paycheck you didn't notice it because, like I said, with direct deposit. And $7 to $10 was like if you're talking like $40,000, the difference was like $7-10 a week.
Well,
so
the best.
Notice it?
The best, the thing though that I found interesting in the big media outlets and newspapers in the last month were writing these and bringing in economists and everything to answer these questions of why tax refunds were smaller. And I know they understand why. They understand why. So, like you said, a lot of people use that as a savings account.
They do. They genuinely do.
I don't want to brag as being someone that saves money and has done a good job, but I just want to go back. Let's go back 35 years. Not you. You can't go back that far. I
can go back that far.
All right. So let's go back 35 years. So a good friend of mine one time said, how much money do you save a week? And I said, at this time I'm married with 2 children. And I said, I just really can't. Well, let's use $400 a week. So let's say I'm making $400 a week.
That's good money 35 years ago.
Okay.
Yeah. He was rich.
Rich. So let's say $400 a week 35 years ago. But my friend said, why can't you save? I said, it takes me every penny to live. He said, that's what you will always say. You will always say. He said, so if you'll go through the bank on Friday and you will deposit $390 into your checking account and $10 in a savings account, it'll take you $390 to live and you'll be okay. So
correct.
Right? So that's
it
right.
does.
Beth, before we go, anything else we want to talk about this morning concerning anything happening out there that people need to know concerning their tax filing this year?
Well, I would like to also go back to the itemized deductions because one of the really big changes this year on that is the state and local tax change, and that is now capped at $10,000, and that's a really big change because that includes your state withholding on your paycheck and your property tax. So that's now capped at $10,000. So if you had more than $10,000 in withholding or more than $10,000 in property tax or that combined, it's now capped at $10,000, and so that's another hindrance that will hold you back on your itemizing. So be careful and look out for that.
Folks, those are some big changes in itemized deductions, but if you're wondering what can I itemize, what can I deduct, what can I do, you call Beth Bennett, H&R Block. You come and see them. Now, how many locations do you have?
We have 8 locations in 6 cities.
8 locations in 6 cities, and H&R Block. And if you call them, they have hours that they operate, but at the same time, they look to work with you anyway. If you have your schedule does not work schedule doesn't allow you to get in there in their office hours, they'll set something up with you. They'll make sure everybody that calls, can I say this? Everybody that calls H&R Block Beth Bennett, it says, hey, I want you to do my taxes and I need to file my taxes. I guarantee they will work with you somehow, some way, right?
Absolutely.
Got it. I knew I could do that.
We'll take good care of you.
That's right. So there you go, tax tips. And if you'd like to share this with your friends, you can always go to our YouTube channel, FYNTV, Fetch Your News YouTube channel, and in the playlist, click on the playlist, and you'll find H&R Block Tax Tips with Beth Bennett. Thank you very much, Beth.
Thank you, Brian.
Stay dry. I guess that's...
I don't think it's possible.
Okay, there you go. All right, we'll be back in just a minute with some of our closing statements of the day.